Credit reports are looked at by various people. They're looked at by companies that you're applying for credit from, such as a credit card company, a mortgage company, a bank, an auto dealership for your car loan. They can also be looked at by insurance companies, by your landlord, by your employer, by the government, and others. Most of the time you have to give permission for them to check your credit. Read an employment application. Sometimes it will have a statement on there that by signing the application you're giving permission for that company or that person or whatever to check your credit. Governmental agencies for child support, for housing assistance, for other types of official governmental assistance can check it automatically without your specific consent, although it probably is going to be contained in the application that you fill out as well. Insurance companies can only check it with your consent. Check your application, check your information that is sent out by your insurance company if they give you notification of some type of check that's going to occur. What they're all looking for in the credit report is to see, number one, what is your score? Some companies, those fill it out online applications will probably only look at the score. And the scores range by groupings of 100. And they're looking for a particular number, and if you meet that particular number and you meet a certain income number that they have designated, then you'll be granted the credit. Other companies, are the reasons for the credit application or checking the credit, such as a mortgage company, are going to look a little bit further. The specific information on the credit report is your name, your social security number, address or recent address, employment information, credit that has been extended to you, and your participation, your performance on that credit. If you paid on time, if you paid late, if you stopped paying at all and it was referred to collection, if you were sued by that company, if that company got a judgment, if you failed to pay your taxes, if a tax lien was filed, and then finally if the credit was, or the account was charged off, or if you filed bankruptcy. Those different kinds of events will last on or remain on your report for different periods of time. The longest period of time will be a bankruptcy. A Chapter 7 bankruptcy is on there for 10 years. A Chapter 13 bankruptcy is on there for 7 years. Most things are on there for 7 years. Credit inquiries, when somebody pulls your credit, which means they get a copy of your report, that lasts for 2 years. And that is something that some companies will look at also. How many inquiries were there? And their inquiries are both inquiries for somebody that you don't have a credit account with, that's somebody that you've applied for credit with, and then there's also an inquiry by somebody who did give you credit. That will come up when you're applying for a renewal of a loan, or you had a car loan with a bank and now you're getting another car and you're going to roll over that loan or apply it to a new car. But also if there are delinquent payments on your account and that creditor is checking your credit, that signals to somebody else who's checking that there's a problem. So that's what it means to them. Then what do they do with this report? What they do with this report is they evaluate whether you need a deposit if it's a renter situation, if you need a deposit if it's a utility situation, if you need a shorter term contract, if it's a cell phone situation, if you need a higher interest rate. Interest rates are determined based upon risk. What is the risk that you are or are not going to pay them? If you have a higher credit score, your interest rate and your negotiating power is better because your interest rate can be lowered because there's not a big risk that they're not going to get paid back. If you have poor credit, then they're looking at a higher risk that they're not going to be paid back, and so they charge that to you by assigning a higher interest rate, so that if you don't pay them back, they've been compensated a little bit for extending the credit. Now, if you have a correction to be made, you need to send in paperwork. It should be in writing. tangible writing. Sometimes you can do it online, but you should keep copies of everything that you send in, because if you then go to apply for a loan and they see that there are some different questions on or bad marks on your report, you can show them the documentation that this should be corrected, or an explanation, if there is one, for why it's on there incorrectly. Now, you're entitled to a free report from each one of the 3 reporting agencies, Experian, Equifax, and TransUnion, each year. You want to check that to know where you are, and this check does not count count as an inquiry. This is you checking it. You want to see what is your score, if things are being reported, and also this is how you can find out if there is any identity theft at work in your situation. There are 2 kinds of identity theft. One is where somebody applies for credit on you to buy something. They steal your credit card information, or and they go and use it to buy something for them, and then you get the bill. But there's another kind that's a little more insidious, and you might not know about it, and that is the kind where someone actually uses your good credit and buys something, a car, a house, whatever, and I would say in the old days a stereo system, but they actually pay the debt. So they buy the item using your credit, fraudulently, obviously, but they're actually paying for it. And the only way that you're going to know about this is if they stop paying for it, or if you check your credit. And because all of your credit that you have been extended is considered to be credit that you have used when you go to get a loan, for example, the biggest loan is probably going to be for your house, you need to know what's real and what's not on there, because somebody can borrow your credit and buy a car, and then when you need your credit and you go on and a lender goes on there to look at it, they see, well, you've got 3 cars, but you really only have 2, or you only have 1. The fact that there's 3 loans on there is going to count against your income and restrict the further amount of credit that you're going to qualify for. So while you're not just checking to, like Googling yourself, you're not just checking your credit report just to pat yourself on the back for a good number, but that's how you're going to find out if somebody has used your credit improperly.